Good afternoon, everybody. Greg Fisk. I'm the broker over here at JPAR Real Estate Maryland Living. We've got special guests with us today for our Zoom Q&A about home buying workshop. Michael Marinucci from Main Street Home Loans. So we've got our resident expert on all things lending within the real estate space. So good afternoon and welcome, Michael.
Thank you, Greg. Thanks for having me. Good to be here. More than happy to help.
Yeah, that's awesome. We wanted to put this together. We have some questions for some of the first-time home buyers that we're working with. We want to get this out there on some of our YouTube channels, our social media links, make sure that we are being proactive with providing resources for our customer base and hopefully client base for who are thinking or considering buying a home in the next year or so. So we appreciate it. We've got a few questions in the queue. And then, first-time home buyers should be asking these questions so they can make informed decisions. We highly recommend that they schedule a buyer consultation with us, one of our agents, myself, and Mike. And, we are fiduciaries when we operate in that capacity with our clients under buyer agency agreement. So we're there to look out for your best interest legally. So it's always a good idea to begin that process with take a deep dive on a buyer consultation. And we're gonna answer some of those questions that you might have and get the process started for us today. So again, thanks, Mike. What we got, one of the questions is from actually one of the buyers that I'm working with is what is my potential budget for buying the home and how much can I afford to borrow? And I know that so obviously it's different for each unique individual and circumstance, Mike, but that's a fair question. How do you guys go about determining what particular client's budget's going to be?
Sure. So, budget and what you can afford are kind of generally, they can be two different things, right? So, what you're comfortable with paying and what you can afford or what you can qualify for can sometimes be two, drastically different things. So, that's the great thing about doing a pre-approval with us here at Main Street Home Loans is that, we don't just give you, a one size fits all loan product, a nice cookie cutter. We, tailor make everything for each individual client's specific needs. So, we like to have those conversations about, well, what are your comfort level for some of these things? What is your comfort level for a monthly mortgage payment? What is your comfort level for a down payment, closing costs, things like that? And then allows us to kind of structure their loan to keep them comfortable. And, we can come back with some different options on saying, hey, here's how much home you can afford. Here's what you can qualify for. Here's what your payment's going to be. Here's what your down payment's going to look like. And if that's where you're comfortable, great, full steam ahead. But maybe those numbers are a little higher. Obviously, then we can scale that down to stay within your comfort zone. So knowing, you can qualify for X, but you might want to be looking in the Y price range to be comfortable. And then on the flip side, if you're looking to get qualified for a little bit more, then that's when we can look at maybe adding some different options there as far as maybe paying off debt or increasing income on your application to get to that higher sales price range to find what you're looking for. So budget and affordability are kind of two different things, but we tackle those on the pre-approval side of things.
Awesome. And you mentioned the word comfort level, right? That's always the conversation I'm having with my clients, really, because it boils down to what's your comfort level. People sort of innately know what their comfort level is on a monthly basis, right? If they're coming from the tenant world, the rental world, they know what their comfort level is on that monthly payment.
Right.
There's some other things that go into that loan and that loan payment with property taxes, insurance, maybe HOAs, condo fees, something like that. So we really want to get an informed idea, and a couple of those are going to be answered as we go along in the home buying process, right? We're not going to know specific properties from Jump Street exactly, but it's good to have those conversations up front so that you can kind of have a ballpark and factor in. You're going to know if you're going to be looking at condominiums in a certain area that those costs are to be determined, so to speak.
Right. Yes, because all those get factored into your monthly mortgage payment, right? And that's what we use for qualifying on what's called your debt to income ratio. And that's pretty much the determining number where we can figure out, how much home you can afford, how high you can go on that monthly payment. So, for anybody out there listening, if you just want a quick idea, of just, quick calculation of affordability, 45% is kind of the magic number. There's wiggle room on that, but take 45% of your gross monthly income. Okay, and then you have a number there, and then you subtract any of your debts from that. So car payments, installment loans, credit cards, things like that on a monthly basis. And then that's what you're left over with is pretty much your max affordability on a mortgage payment. So a little bit more, deeper than that, but just, a quick calculation if someone just wants to get a ballpark idea is that's usually what I tell them to take a look at, that 45% rule.
It's awesome. That's a great benchmark. And that's why when you're starting this process, it's really important to put your team together. Your realtor and your lender, they're going to be really the ones sort of driving the bus from the beginning. And then, like Mike said, he's going to do the pre-approval process with you. But then as you go shopping and when you drill down on a specific property, and then the lender's going to, jump back in play and really firm up those numbers and look at the property taxes, condo and stuff like that. So
a good way I
that's
like
great.
to kind of put that analogy is the lender's kind of like the head coach. We're calling the game plan, and then the real estate agent's the quarterback. They go out and execute the game plan. So we kind of give the game plan to the real estate agent, and they go out there and take the client out and look in that home price range and things like that. So that's kind of the way I like to look at it, is kind of like a coach quarterback.
Awesome.
How you kind of handle the team, if you will, right?
Yeah. And you touched on this briefly, but what are the upfront costs, such as down payment, closing costs, and some of the other fees that a buyer might expect upfront?
Sure. Yeah. So that is one of the big questions we like to ask up front. So the term that we like to use is what we call your cash to close, because your down payment is just your down payment. That doesn't include your closing costs, right? So, you have to bring all of that money to the closing table. So that's why we like to call it your cash to close. That's your down payment plus closing costs. So the difference between the two is, the down payment is the percentage of the money you're putting down against the house for the loan amount. So, being a first time home buyer, you could do as little as 3 to 3.5% down payment. And there's really no limit on the max. You can 20, 30, 40, 50, 90% down if you wanted to. And that's based off of the sales price of the home, that percentage. And then your closing costs, those are items that are kind of secured with getting the home and getting the loan process and things like that. So your closing costs generally is about another 3 to 4% on top of your down payment. Now that varies from property to property and things like that. But your closing costs are going to be like things like any type of lender fees, application fees, underwriting fees. If you want to buy the rate down with any points, you're going to have title company fees as well too. And then also the big one is going to be like your transfer taxes and recordation fees. And the easiest way to explain that is that's essentially like the sales tax that you pay to the county and the state to purchase the home. So those all go into your closing costs, and you lump all of those together, and that's that figure you need for cash to close.
Yeah. Yeah. And then, appraisal fees, right? That's in there as well. And there's some
Yep.
variable costs we'll talk about a little bit later too, like your inspections, right? You're going to need some money for due diligence on those properties. There's a lot of different inspections depending again on the house type. So that could range anywhere from 400 upwards of $1,200, depending on exactly what you're having inspected and the scope of those inspections.
Right. So from a buyer's perspective, yes, that does add cost. But from a lender's perspective, we don't really typically require inspections. We just go off of what's on the appraisal. So that extra additional cost wouldn't kind of be factored into what we need at the closing table. But yes, that would come out of a buyer's pocket for any additional expenses that they want to pay for the inspections and things like that.
Yep. Yeah, just something to keep in mind when you're
Yep.
sort of doing your upfront budgeting. And also, we're talking about those closing costs, like you said, using the term closing costs. Your agent would have the ability to negotiate maybe seller concessions,
Mhm.
a buyer allowance to help with those closing costs there too as well. So keep that in mind. Also, there's a thing called gift funds. You might want to mind touching base on that for a sec, Mike, about
Yeah,
what
yeah.
gift
So I'm
funds.
glad you kind of brought that up. So that's a great point. So yes, so technically, um, only the home buyer is required to bring their minimum contribution to the table, which is the minimum down payment, right? So the home buyer has to bring at least their minimum down payment to the table. Um, But the closing costs, the great thing about closing costs is that can be paid by anybody. That can be paid by the buyer, it can be paid by the seller, or a combination of the two. So, you know how it is in today's market, it's a little challenging to get some of the closing costs help to get the seller to pay it. But if you can negotiate that, and you got a great agent and they, you found the right property, you can negotiate that. Yeah, you can technically have the seller pay the closing costs and they can technically pay just about almost all of the closing costs, depending on the loan type you're getting, to where you're just bringing the down payment to the table. And then some other solutions, Greg, like what you kind of hit on too, to get that number lower is, yeah, you can get gift funds as well too. You don't have to be a first-time home buyer to get gift funds. Pretty much anybody can get gift funds, just coming from a family member or relative. And the great thing about gift funds is that money can be used towards the down payment or closing costs. So it's not like seller concession where that can only go to the closing costs. Gift funds can actually be applied to your down payment as well too. And there's also programs out there as well too that can help reduce your out-of-pocket expense by getting down payment assistance or closing cost assistance or something along those lines.
Yeah, not take too deep a dive on that, but since you sort of brought it up, a lot of people do ask about, are there grant programs, something like, anything like that that could assist them with those monies that they're bringing to the table. Do you mind touching base on a couple of those programs, or giving us a general overview of what something that would look like?
Yeah, so I mean that's the big reason, why we want to do the pre-approval, right? And that's one of the things that we'll uncover when we're doing the pre-approval is, we can explore those different options. So some of those first-time homebuyer programs where they give down payment assistance, there's a little bit more to qualifying for them than a traditional loan. So, sometimes they're a little bit more challenging to get into, but if we can make those work, that's an excellent way to go. There's a lot of different first-time homebuyer programs out there. So it really just kind of depends on the area that you're looking to purchase in. Some are what they call 0% deferred loans. So, let's say hypothetically, you can get $5,000 in down payment assistance and it's a loan. You do have to pay that money back, but it never accrues any interest. You never make any payments on it. You pay it back when you, let's say, sell the home or refinance the home. And there's other ones that are grants where if you live in the home X amount of years, the money's fully forgiven. You never have to pay any of that back. So, yeah, the different programs really just depends on, what we can qualify for, what areas we're looking in. And a lot of those first time home buyer programs, the trickiest thing is there are income limits as well, too. So how much you can make. The way they kind of look at it is if you make over this amount, let's save it for, somebody that needs it to help a little bit more. So,
Yeah. And some of those grant programs are geographically based too, as well, right, Mike?
correct. Yep. 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 So all depends on the area and things like that. And then, a lot of times, the way I kind of like give you the scope is you have programs that are available at the federal level, and then you have programs that are available at the state level, and then you have programs that are available at the county level, and then sometimes you have programs that are available at the city level, right? It just depends on which avenue you can kind of go down and which one you can qualify for.
Awesome. And you mentioned, 3.5% down and some different varying loan types. And yeah, touch base quickly, if you don't mind, on the different types of loans. I know there's several out there, and you mentioned, I guess, FHA, but also VA for veterans and active duty members as well. But give us an oversight of what some of the different loan programs look like.
Yeah, sure. So we call those your agency loans. Those are going to be your major loan types. I would say 95% of home buyers are going to be, fitting into one of these, categories as far as your agency loans. And they are, your conventional loans through Fannie Mae and Freddie Mac. And, a lot of people think conventional loan, you need 20% down, not the case. You can actually do a 3% down payment on a conventional loan, which is very nice being a first time home buyer. And they also allow for some non-first time home buyers, depending on certain products, to put 3% down. So, you're starting to see a lot more of that become a first-time homebuyer option compared to FHA. FHA is still kind of the bread and butter for a lot of first-time homebuyers. They allow for minimum 3.5% down payment, a little bit more relaxed underwriting standards as far as credit score requirements and things like that. But you're starting to see those conventional loans take a little bit of that market share from the first-time buyers. Those two, pretty much anybody can qualify for those. It's really going to depend on your credit score, credit profile, And then you have, your VA loans. So you obviously have to be a veteran for something like that. So that's not open to, everybody. You have to be a current veteran or, previous or retired veteran to qualify for a VA loan. Um, Great loan, 100% financing, so no down payment, great rates, no mortgage insurance. So excellent loan if you're a veteran. There's also USDA loans out there as well too. Again, most people can qualify for these, but it's more geographically restricted. It kind of has to be in a rural area for a USDA loan. But great thing behind that, again, 100% financing, so no down payment. So it's a great way to get somebody in that has maybe a little less money to bring um, to the table. So those are going to be your main agency loans, and you can stack down payment assistance, closing cost assistance with those programs as well too.
Awesome. And, we talked a little bit about it, like the seller concession, and I know devil's in the details, but that changes varying on your loan type, right? VA
Correct.
allows for a certain amount of seller concession, where FHA. So that's why you really want to make sure you're talking to a lender professional and you have your game plan in place when it comes to putting that whole package together.
Exactly. Yeah. Because the last thing you want to do as a real estate agent is negotiate, X amount of seller help for your buyer, and you can't use it all because of the loan type. So there are some restrictions on those loan types of how much you can get. So, we can't go over those amounts.
Yeah. And you mentioned it as well, credit score. So we have a question. What's my credit score? How will it affect my ability to get a mortgage? And you know, that's a big part of it, right? So
Oh,
yeah,
yeah, yeah. So
talk to
credit
us a
score
little
is
bit
going to
about
be
credit.
the number one determining factor in what we look at as far as, what's going to make the most sense from a loan type perspective, because loans are going to change, or excuse me, interest rates are going to change based off of credit score and the loans that we're doing. So, they're very dependent upon each other. So depending on where that number is, that kind of gives us an idea. Hey, you're going to get better rates with this program, and you're going to get lower payments with this program versus this program. So yeah, interest rates. Do play, or excuse me, credit scores do play a big factor in the interest rates. So as far as what makes up your credit score, that's kind of a loaded question. A lot of things go into that, but really, it's just the biggest things are having your trade lines established for a certain amount of time, having your balances lower on your trade lines, so not maxing them out. Um, Big thing to really keep your credit scores high and clean. No late payments, no 30-day, 60-day, 90-day late payments, no collections accounts, things like that. So as far as the amount of trade lines and your balances, that'll help give you higher scores if you have satisfactory accounts and lower balances. But the bigger things that's really going to impact the score: payment history,
Yeah,
payment on time, any derogatory accounts, things like that. So, and then that will affect the credit score. And what I tell first time buyers or any buyers that might be a little hesitant to get pre-approved, they might not think that their credit scores are where they need to be. I usually let them know, one, you probably don't think your score doesn't need to be as high as you think it probably does. And two, if we're not quite there when we pull your credit report, the great thing is we can build that plan for you. So we can say, hey, if you pay this down or pay this off or do this, this, and this, get these taken care of, wait a month, we rescore, you might be up 30, 40, 50 points. And that might help you qualify for more loans or get you different interest rates, better interest rates, something like that. So we'll always be able to build that game plan for you.
yeah, and that's really the key, right? Is like, don't bury your head in the sand. If you're thinking about it, if home ownership is a goal of yours, get the process started now. It's never too early to have that conversation with
Right.
you, the
Right. Don't
lender.
tell yourself, yeah, don't tell yourself no, right? See
Yeah,
what you can do. And, we're never going to come back and say no. We're just going to say, hey, we can't do it at this time. But if we do X, Y, and Z, then we'll be in a better position to be able to purchase. And, yeah, so we're more than happy to kind of, give you that game plan to get where you need to be.
yeah, and you'll be able to sort of paint that picture and give them some clarity on where they're at now and where they need to be. So it's better to get the process started sooner rather than later. Not to jump ahead too much, but when you were mentioning trades line, it just made reminded me, like, too, when you go under contract, no new trade lines, right? No new Kohl's card, no, don't go out and buy a
Yeah.
car
Yep.
or anything
Yep.
crazy.
So we kind of call that best practices, right? So, what we tell our clients is that, hey, while you're pre-approved, here's some things to consider while you're pre-approved to not jeopardize your pre-approval, but also too, not to have to create like a paper trail nightmare, because the more things that we see, the more things we have to ask about. So it just kind of helps uh, limit the amount of documents we need from the home buyer. But yeah, great thing is when we pre-approve you, it's based on your current financial situation. So if you go out and you get a new auto loan or a new installment loan, new credit card, and you run that balance up and you have payments on them now, that's going to affect your pre-approval amount. It could affect your ability to get the loan. So, we say during the pre-approval process, especially when you're under contract, don't do any of those things. Sit tight. Wait to finance the furniture till you get the home. Things like that. And then, hey, once you got the keys to the house and you sign on the dotted line and you're living there, then you can go wild after that. So just
How
before,
about
we don't want to see anything, but afterwards,
yeah,
it's no issue at that point.
for sure. So and just so we're painting the picture. So as the buyer, you want to, set up that buyer consultation, meet with myself, meet with Mike. Mike's going to give us some, after having a conversation with you and what you can afford, we're going to set our budget. So now we know kind of the most important thing, what we're looking at budget wise. We can start shopping in that price point. But we're
Mhm.
going to want to have sort of a discovery phase consultation too. Then you drill down on, what's the familial makeup, occupation, recreation, what are your dreams, what do you want in a house. So
Right.
what type of home are you looking for? Single family home, condo. And again, those condos or homes with HOAs can affect your purchasing power, so we need to be cognizant of that, keep that in mind. But as your realtor, we focus in on what your must-have features are, amenities you're looking for in the home, the community, what neighborhoods, or in terms of what you're looking for drive time to work, or that sort of thing, different
Hmm.
types of schools, amenities. So then we kind of start the kind of the fun part. We go shopping, right? We've been given the keys to go shopping by the lender, and like Mike said, the coach said, have at it. Here's your budget. Go find something that you fall in love with, that is meets your dreams, or checks off a few of the boxes. Right? No home's going to be perfect, but we
Right.
want to go
Right.
out there and start shopping.
Yeah,
Um,
that's kind of the unknown part too, right? So the pre-approval, I mean, we could turn pretty quickly. If you're qualified and we get everything that we need, we can do a pre-approval in as little as 24 hours, and then we can come back to you, Greg, and say, hey, here's the game plan for this buyer. And like you said, that's when you get them out, and that's when the house hunting starts, right? That's the
yeah,
fun part. So you might find a house in 2 weeks, or it might take 2 months, or it might take 2 years, right?
yeah,
So
yeah.
it just all depends on what's out there.
Yeah, and this is leads me into a point I hadn't thought about. It's not on our one of our questions here that we've gotten in, but again, this is where you would, at that point in time, you want to have that pre-approval. You want to have already had this conversation with the lender, because if if by chance, like, the first house you see is the one that you love in this market we're in with low inventory, if it just came on the market and it's priced right, there's probably going to be maybe multiple offers, or there's going to be a lot of action on that home. So you want to have all your ducks in a row. That's why you want to have had that conversation with Mike. You want to have your pre-approval in place, and you
Right.
can put an offer in. And this is where I was saying you would circle back around with the lender and be like, hey, Mike, we've already found the house that we like. It's 123 Main Street. Here it is. Mike will run some additional numbers and make sure you're still within that qualifying range, based on taxes and HOAs or whatever other fees he might see. So that's where we kind of loop the lender back in, and then we have a conversation between the realtor and the buyer, formulate what we want our offer price to be. We'll do a market analysis for you as well, and that's where we put the offer together for you. We will provide a sample uh, of the contract to our buyers ahead of time, so that they can kind of take a look at it, so they're not scrambling last minute to sort of digest everything that's in there.
Oh yeah.
Maryland has a very complicated form set. We've got a lot of forms to our offers. There's a lot of contingencies that might be in with your offer to purchase. Our base offer contract's 10 pages long, but then when you start adding financial addendums to it, home inspection addendums to it, whatever it might be, it can become a little bit lengthy. So it's good to
Every
sort of
year.
look that over.
I was every year it feels like they add another page or two, right? So
Yeah,
you
for
get so
sure.
used to seeing this paragraph on this page, and then all of a sudden you start to see it slowly move down the page a little bit more, because more things keep getting added, right? So
Yeah, yeah. Rarely do we see things, um, you know, shrink in
Right, get cut off,
contrast.
right? Yeah, yeah. But
So
you brought up a good point though about the contingencies though. So, that's a pretty big part to hit on as far as like a lending perspective. The main one that we're really looking at is the appraisal contingency. And you don't always have to have an appraisal contingency. There's some different things you could do out there from a lending perspective to where we don't technically need it as a contingency. We still have to get one to make sure it meets value. But somebody that's making a sizable down payment, the home doesn't really need to appraise for the appraise. As long as you're really meeting the loan value, you're okay there. Um, so, that's a big one for us. And then the financing contingency, obviously, the reason why we do a pre-approval and not a full approval is because, we can only see so many things up front. And then once you dive deeper into it and getting the full approval, you might uncover some things that all of a sudden maybe the borrower isn't qualified anymore, or maybe they did something silly and went out and got that $700 a month car payment and we didn't know about it until we were under contract, and then it kind of changes up your ability to qualify for the loan. So you do want to protect your home buyer that way. And I'm sure you can speak on some of the other contingencies from your perspective, Greg, that kind of helps protect the buyer as well too.
yeah, sure. Like you said, we're going to have that financing contingency in place, which would may not have an appraisal caveat to it. Home inspections, and again, home inspections can, around here can be everything from structural, mechanical. You're going to have like a wood destroying pest inspection in there, probably if the property's on a well inspection, well water quality, septic, if there's a septic inspection, chimney inspection, radon inspection. So it can be pretty extensive depending on the scope of what inspections you want and the particular property, right? Not all properties are the same. So it's really predicated on the property. It's going to be way different for a condo than it is a single family home, that's on well and septic. So again, that's where you're going to have that conversation up front with your realtor and make sure that you understand what you're walking into prior to making that offer, and make sure that you have those contingencies baked in to your offer as well. So again, we kind of talked about that process of making an offer on the home. You and your realtor are going to consult. We're going to make sure the lender's on board with that. There's other terms in the contract. Settlement date, that might be the lender may, if you're trying to pull money from a retirement account or something for your closing costs or something like that, that's a conversation you're going to want to have with the lender. Make sure that the settlement date is in line with your ability to close on a property as well. So again, we're all coming back together, getting on the same page with that. And, some people may not know how the appraisal process works, but maybe in general, give them a bird's eye view of, so they work with you, the lender, but there's also, you guys have a processor, an underwriter. The appraiser is completely wholly separate from you guys. I mean, it gets pinged off of your management company that orders it, but you guys really don't have anything to do with it.
Right. Yeah. So that, we do get an appraisal, obviously for two reasons. One, it protects the lender and obviously protects the home buyer. Right. So, we want to make sure the value of the home's there. We don't want to lend on a property that's going to be underwater. So we give a $500,000 loan to a property that's only worth 400 or 350. And, that protects us and the home buyer. Right. We don't want the home buyer underwater either. So, the big thing about the appraisal protects both parties, make sure the value's there. But yes, we as the lender, when we order it, it goes through what we call an appraisal management company, so a third-party vendor. So, long gone are the days where you just pick up the phone and call your appraisal buddy and they give you the value that you need. So it's, a third-party independent value. You make sure it's fair for everybody. But yeah, we ordered the appraisal. There's really not a whole lot that the home buyer needs to know. We're not really know, but not that they need to really do on their end, because it's all kind of done behind the scenes. They don't have to be at the home for it. The appraiser is going to typically contact the listing agent or the home buyer to schedule an appointment, or excuse me, the listing agent or the seller to schedule an appointment to come out and review the home and walk through, do the appraisal. Again, the buyer doesn't really need to be there for that. They can if they want to, but it's not like a home inspection where they need to be there for that. And they write up the report and they send it to us, and then we get a value, and that's how we justify the sales price of the home and things like that. So that's kind of the bird's eye view of how the appraisal process works.
Awesome. And then, for like the underwriting process, can you give a sample of some of the documentation or documents that you might be, a buyer might be required to provide you guys?
Sure. Yeah. So, the whole nutshell, like you had mentioned earlier, it goes from loan originator to your processor to your underwriter, and to your closer, and that's kind of on our side. And then working behind the scenes. You have the title company, the appraiser, things like that that we work with, but we don't have 100% control of, like those other things I'd mentioned originally. So during the pre-approval process, we're going to get certain documents from you that we know we're going to need for underwriting. So things like your pay stubs, your W-2s, your bank statements, your tax returns, and depending on your situation and how you're employed and how you're compensated and what type of income you get, or what type of things that have happened in the past, we may have to get additional documentation. So that's where our processing department steps in. So once we get the loan in, we get the contract, we get everything set up, our processing department takes a look at it, and they look at any additional items that might be needed for underwriting before they submit it. So they kind of go through the file with a fine-tooth comb, and they might be reaching out. So maybe our home buyer was previously married, they're divorced. You might have to get a divorce decree or separation agreement to see if there's any stipulations there with payments or things like that. Other things that could be, just credit inquiries, things that looked into your credit, talking to your employer, confirming things. So it's really hard to say exactly what we need other than those documents that I mentioned previously until it goes through that, processing department. And then we get it to our underwriters and they review it. And if there's anything additional they might need as far as some of those documents, they'll be reaching out. So, and again, it's hard to say exactly because every situation, every borrower is a little bit different. But everybody's always going to need to provide W-2s or 1099s, pay stubs, bank statements, tax returns, things like that.
Awesome. And we talked a little bit about, you were talking about the appraisal process, but that home inspection, if you're doing a structural mechanical home inspection, we have people that we recommend that we do business with.
Mhm.
If you don't already have a preferred home inspector, but we highly encourage the buyers to be there at the home inspection. You're going to learn so much information about, your new home, useful information about the ins and outs of, where your main water line supply is, the mechanicals, and just very useful information on top of, what other defaults or factors that you might be discovered during the home inspection. So we're going to help coordinate that process with you as a buyer as well, but that's an intricate and a big part of the process. Then we'll, based on that home inspection, we'll negotiate repair requests or credits in lieu of repairs. So that's part of our job as the realtor as well on that. Now we want to make sure that there's no potential safety concerns or structural issues, obviously, with the property. And we briefly mentioned title too. They're not on our call or panelists today, but they're a big part of the team as well. They do a lot of the heavy lifting towards the back end of the process. They're going to check, make sure that there's no clouds, other liens or encumbrances on that property. Make sure you have clear title to the property. They're going to be the ones conducting the actual settlement. So big part of the team too is title for that.
Yeah, a good way to kind of piece it together, Greg, like you kind of mentioned, is it's like all the moving parts. You kind of have like your realtor. I would say they're more focused on the home search and the actual home, and then your lender. We're kind of more focused on the loan and getting you approved that way. And then the title company, they're the ones that are going to be most focused on the actual subject property as far as paperwork goes. Liens, things like that, and transferring of the title from one property or from one person to another, and make sure that goes through seamlessly, and we all work together to coordinate that.
Yeah. And another question here. Oh, well, there is a note too. When you're originally talking to Mike and determining what your budget is going to be, and what your comfort level is, home ownership's not always the right answer for everyone, right? Like, if you plan on relocating because of your job within, X number of years, it may not make financial sense to purchase a home. Mike's probably going to have that upfront conversation with you about, some of the costs too, that you can ask your realtor what's involved in a resale. Is it smart, to purchase a home at this time if I plan on relocating in 2 to 3 years or whatever that might be? It's every circumstance is different, but you do want to be asking those questions.
Yeah, and that's a big part too, Greg. Because when it comes down to renting versus buying, so every situation's a little bit different. So when we deep dive into that, we can figure out what makes a little bit more sense. And then also it's it's not always about necessarily buying and you're relocating, because you could always retain that home, keep that as a rental property, still build some wealth that way through, the loan pay down appreciation. You have an asset under your belt. So, living in an area in a short period of time doesn't always necessarily mean I have to rent, right? It doesn't make sense to buy because you can always keep that as a rental. But, generally where you kind of start to see some of the biggest benefits is if you're living it as your primary residence versus moving away and renting it out, is you start to see that 3 to 4 year period. So when you're looking at it in the first couple of years, renting and buying, they're going to be pretty similar in numbers. The upfront cost for buying is going to be a little bit higher than renting, but once you start getting to year 4, 5, 6, 7, 8 and beyond, it's an astronomical difference of buying versus renting. Your buying power is going to be so much better than your renting power, because your mortgage payment is essentially fixed, for the life of the loan, versus, your taxes and insurance going up a little bit, but that rent's going to go up every single year. So, once you start getting to year 6, 7, 8, your $2,000 a month mortgage payment that was kind of high, back then, is going to be looking great now when everyone else is paying $3,000 a month rent for what you
Yeah.
have on a mortgage payment. So it really starts to pay dividends once you start getting to that, 3 to 5 year plus. And then, further past that, even more, and then plus the equity you're getting in.
Yeah, I was going to say, we're not even factoring in the equity, right? And real estate has historically been a very sure investment opportunity. I think we've only lost values twice in the last 40 plus years. One, the last time being maybe the Great Recession, which was kind of an anomaly. So it's a pretty secure investment from an investment perspective, certainly. Leads me into the next question we have. What are the current market conditions, and is it a good time to buy? Well, that's that's unique to each person too, I think, right? Is it a good time to buy for you, dependent on your circumstances and where you're at in life right now? I mean, we do have a lower inventory situation right now, but also with the rates where they're at, we don't necessarily see as much competition as we did. So if you want to get into the market right now, there is probably maybe a little bit better chance to see some seller concessions. If you wait towards the end of the year and rates come down significantly, we're going to see a mass movement back into the buyer pool from a lot of buyers. Probably we'll see competition really rise because there's been a lot of pent up demand, and unfortunately with that, in the past, like when we saw like the COVID surge in the markets, we saw buyers having to forego home inspections, waive appraisal contingencies, and stuff like that.
Go
So
over list price, come out of
yes,
pocket or cash over list. Yes, it was very,
yeah,
very competitive. Yes. So
yeah. So when someone ever asks me, is it a good time to buy? It's my answer is it depends, right? It always
right.
depends on your current situation.
It always depends on your current situation. Like you said, it's going to be different for everybody. But generally the kind of spiel that I give is it a good time to buy? Based on your current situation, if the numbers are comfortable for you, I think it is a good time to buy. If it's something that you're comfortable with and you can afford to do it, nobody has a crystal ball, right? So nobody knows what's going to happen in the future, right? So if you're comfortable with it now, and let's say things get worse, right? Maybe rates go higher, prices keep going up, or like you said, Greg, even though rates go down, prices go up because supply and demand, because now more buyers are coming into the marketplace and things like that. Now it's harder to get a home. So when you bought this year, you're going to look like a genius, because now it's going to be much tougher to get into a home later in the year and next year. And let's say, maybe it goes the other way, or something like that. Maybe it's not as hard. Know that one, you got a home and you're still comfortable with that payment, and we could always get that payment lower for you as well too. If rates drop down, it's a whole heck of a lot easier to refinance your home and get a lower rate on your payment when you already live there. There's no competition versus trying to buy at 5% or 4% rates when everybody else is doing the same thing as well too. So again, it depends, but if you're comfortable with it, I say, hey, pull the trigger now, because you don't know what's going to be in store in the future.
Exactly. Yeah, you stole my point. Like, if you're in the property now, rates go higher, you're a genius. If you're in the property now, rates go lower, it's much easier to refinance than
Right.
try and
And
go
you're
out and
still
shop.
comfortable with that payment, so you're okay there. And if you can get it lower, that's just icing on the cake.
Yeah, for sure. That looks like it kind of hit on basically all the questions that I had in our queue. I really appreciate your time, Michael, as the expert within that space and lending. And again, that's it for home buying 101. Most of the heavy lifting's done up front with the conversation with the lender, right? Where's your comfort level on the payment? Once you knock down that domino, your team starts, we start to all work together. Then we can kind of have those discovery conversations about what you're looking for. What are your goals for home ownership? We can start shopping for the perfect home for you as a buyer. We keep the buyer in the loop. We bring title into it. We do our due diligence, our home inspections, make sure the market analysis is right. Title does their thing, and at the end of the day, we have settlement. You get the keys, and it's a pretty joyous moment. I've been fortunate enough to be part of lots of settlements, and it's my favorite thing for sure.
Definitely.
But again, the big part is, like we said earlier, the hardest thing is just get the process started, right, Mike? Give you a call, figure out where you stand, and then we can formulate best game plan for you from there.
Exactly. And I think a lot of that can be fear sometimes. People don't think they're quite ready for it. They're not sure. They don't know it's the unknown, right? Or they don't want to get told no. They're afraid they might get rejected. But, like I said, we're never going to tell you no. We're just going to say, if we can't do it now, here's how we put ourselves in a position to be able to do it. And we're going to build that game plan. And, and I'll kind of leave it at this too. When we do a pre-approval for somebody, when you reach out to a lender like myself and we do that for you, there's no commitment or obligation to having to move forward. It's not like by doing this, you have to get into a home in the next 2 weeks or 3 months or whatever it is. It's purely for your knowledge only. So it lets you know where you stand now, what you can qualify for now. And if the numbers make sense and you're comfortable and you want to move forward, great, you can do so. Or if you don't want to move forward and you want to wait for X, Y, and Z to get more comfortable for you, we'll be ready when you're ready. And if you can't do anything just yet, like we mentioned previously, we'll give you that plan to help you get there. So it's never a final commitment or anything like that just by doing it. It's just more of just exploring your options and getting everything figured out.
Exactly. And like you said, we're in your corner. We're that team. We're there to help you remove that fear of the unknown. We're there to provide you with guidance, information, resources, and provide clarity. If that's one of your goals is home ownership, we're here for you. So, what's the best way for someone to reach out to you, Mike?
A phone, email, website, is great, and I would imagine you would probably put our contact information on in this video or in the email as well too.
Yep, we'll do.
Perfect. Yeah, I mean, any way to reach out is fine by me. Phone, text, call, email, uh, all of them work for me.
Awesome. Well, I appreciate your time. We really appreciate your knowledge and you as a resource. Thanks very much, Michael.
Awesome. Thank you for having me. I appreciate it.
All right. Take care, everybody.
Thanks.